But moving on, Redington is a stock on our radar. The company posted a resilient set of earnings. Revenue growth came in at around 11% and the margin has continued to expand for the company. The performance this quarter was driven by the India business, while the overseas business is definitely seeing some pressure. Rajiv Srivastava, who's the managing director at Redington India, joins us now. Rajiv, thanks a lot for joining us. How is FY23 looking? Despite a supply constrained environment, you managed to eke out about a 10% up move in FY22. What is the trajectory?
Yeah, thanks so much for having me. I think we had a very strong quarter of sales and operating margin growth for the year gone by. And these are on the back of our technology capabilities, of partner relationships and comprehensive breadth of offerings that continues to pay off. FY23 is going to be a little different from FY22. There are a variety of dynamics playing out in the market. Clearly, there is a financial situation which we continue to monitor very closely. High volatility, high inflation, high commodity prices, and interest rates going up all the time. And then also there is a shortage of technology products which will continue for some more time. The supply chain is quite disrupted, and that will lead to hardening of prices, end user prices for the near term, which is at least for the next 6 to 8 months. So for FY23, our prognosis is H1 looks quite robust and quite hopefully a good growth will continue to happen in H1, and then we'll recalibrate ourselves as we get closer to the second half of the year.
Right, Rajiv, so you're saying the first half of the year looks pretty good. You'll have to check out how the second half pans out. But Rajiv, I want to ask you about one niggling worry for the street. Now, Apple is your largest vendor with revenue contribution, I think, of what, around 30% odd. And it changed its go-to-market policy, which could possibly negatively impact you as a distributor. Can you highlight and outline the impact of this? Go ahead.
Yes. Look, I think it's a broader topic than just Apple. All brands implement model changes from time to time just to meet the changing requirements of the market. And this is not restricted to Apple. It takes place, it happens in HP, in Lenovo, in Dell. All of them make adjustments to their operating model. And look, at Redington, we are extremely comfortable with that. Because what we have to do as an organization is redesign our strategy, redesign our go-to-market model, our approach to do what is best for us. And I can just let you know from a performance or an outcome perspective, despite the model changes, and many happened last year by Apple, they happened by Lenovo and Dell, all three of them had model changes last year. Our India revenues grew a very healthy 21% for the full year. And so our GTM deployment, our partner relationships, our technology capabilities continue to keep us ahead. And we will continue to witness these model changes because all the brands do what is right by them for their customers, for their partners. And we do exactly, we partake in that, we participate in that changes that they do, and we readjust our operating model to make sure that we continue to grow at a faster clip than the market, which is the way it played out last year. And I'm hoping it will continue to play out forever.
Okay, quick question because, we'll come to you actually in a bit. But let's get back to Mr. Srivastava of Redington, who's been waiting by patiently. Mr. Srivastava, any acquisitions that you'd have lined up in this fiscal? I mean, anything that your stakeholders can look forward to?
And I think that's a great question. While I can't disclose what acquisitions we will make, but I can only tell you that those are on the horizon all the time. A distribution and a very distributed kind of operations that we run between India, Middle East, Africa, Turkey, South Asia will grow on the back of making sure that we have market penetration moves. And these are market penetration moves. We are weak in a few geographies and very strong in some of the geographies. And where we are neutral or weak, we will make the acquisitions to make sure that we continue to lead the market. So, and these will happen in products. These will happen in solutions, in services. We continue to make our portfolio as comprehensive as possible in a few geographies. Typically, Africa and South Africa continues to be a very promising place. And that's how we sort of complete our portfolio and continue to grow the market. The point you mentioned earlier that yes, our growth in overseas was slower than in India. It's a reality. Our growth in overseas was slower. Yes. Just because the market overseas was slow in the last 3 quarters. The market dipped year on year. The compares were negative for all the 3 quarters of last year. But we grew much faster than the market. And just to give you one data point, the PC industry in Middle East and Africa and Turkey just grew 8% year over year, whereas Redington grew 21%.
Rajiv, Rajiv, we barely get you, and we're running a little short on time. So, I want a final word from you. Last year, as you mentioned, India business grew well. Overseas didn't grow that well. Your margins, the clock closed around 2.9% odd. For the coming year, what kind of a number can you give us? That's for FY23. First half, we're expected to be fairly strong. So, are we looking at double-digit growth with a bit of margin improvement from what you delivered in FY22?
I think very difficult to give you a margin guidance right now because the financial situations continue to be extremely volatile. So we'll hold our horses there. We'll hold our prognosis there. For the first half, I told you, I think we'll continue to grow very strong, and we'll calibrate for the second half as we go forward.
Okay, we will leave it at that. Thanks for joining us. Great chatting with you. Well, let's get back to the market, which